Hello everyone. In today's video we will talk about a very powerful strategy, as it will be easy to apply even for beginners. Let's get started so we don't waste time. In this strategy we will use 3 indicators. We will use the moving averages to find out the direction of the trend, and the trend trader indicator to enter a position. And we will use the KDJ indicator to filter the results. Simply, we will enter long positions when these marks are above the moving average, and when we get a fake signal like this one here, it will be filtered by the KDJ indicator. We will also take advantage of strong signals like this, and we will get rid of fake signals like this. To know all this information and how to prepare it, let's move on to the practical explanation, which will be step by step as we are used to. Let's start by searching for the moving averages indicator, and to get many of them, type in the search box 10 and 1. Then choose this indicator, which was created by Highman Show. After the indicator appears, let's adjust its settings. This indicator is very useful. It contains most types of the moving averages, as you can set the value you want and the colors you want. It is really useful especially for free accounts. But now let's pick the EMA 200 and the SMA 100. Also, let's choose the attractive colors so that we harmonize as we trade. And that was it for the first indicator. Now let's look for the second indicator. In the search field type Trend Trader and choose this indicator, which was created by Himadreg. And here is the main indicator for this strategy has been applied, but let's open its settings to get rid of some things that we do not need. Head over to the style section and cancel the entries except for the small arrows, as you can see here. This is good. We only have one indicator left, which is the KDJ indicator. Open the indicators box again and search for it by typing KDJ. Then choose this indicator, which was created by IM Altcoin. If you still remember, we talked about this indicator earlier in the Lorenzi strategy. But let's adjust its settings because it will be completely different in this strategy. In the style section, delete all the lines. As for the background, choose the color you like and darken it or leave it as you want, because this thing depends on your taste. As for the more important thing than the colors, it is changing the inputs. The period will be 20, as for the length, it will be 8. After you are done with the settings, you can now pull it down a little. And that's it. First, we use the moving average to know the trend direction. Second, the trend trader indicator to enter positions. And finally, the KDJ indicator to filter the results. Okay, let's start by knowing the appropriate frame for this strategy. It is recommended to use it on a 1-hour frame, or even more, but it can also be used on 15 minutes and 30 minutes frames. But let's try it now on 1-hour frame to be in a neutral position. And let's start by determining the direction of the trend. Here, when we see that the candles have crossed the moving average lines from bottom to top, we will consider that we are in an uptrend. And after the crossover, the result will often be that the candles will move above the moving averages. But the best thing to confirm the movement of the uptrend is to see that the moving average 100 has cut the moving average 200 from the bottom, and the result will be mostly an uptrend. Because when we confirm the uptrend, we will look for these blue triangles. And if these triangles correspond to the green area in the KDJ filter, we will enter a buy position. Here is another example, a blue triangle above the moving average lines and a green area in the KDJ indicator. But let's explain this example more, because as you can see, there is a narrow area in the KDJ filter. When using the cross tool, it will be clear that the blue triangle corresponds to the beginning of the green area, which is good for entering. Also in this example, all the conditions are fulfilled, and the result was another rise in the market. But do not forget, we will not enter into short positions, and we will not use these red triangles, and the reason is that the trend is moving in an upward direction, and the evidence, because it is moving above the moving averages. Here, we find that we have an entry signal, but when we see the filter, we notice that it is in the red area, and this means that it is a false signal that has been caught. To make sure, always use the cross tool to make a straight line between the target and the filter area. Here, we find the pullback entry point, which is really good because the candles touch the 200 line, and this mostly causes a strong bounce. Now, let's check how the buying points look like and how they will be on real trading. And let's use the time machine and go back to this point. Well, here we see that the buy signal has appeared and it is above the moving average lines, but when we see the KDJ filter, we notice that it is still red, and this means that it is a false signal that has been eliminated. Let's continue and see how the next signal will be. Here another signal appeared, and it was also above the moving average lines, but here the filter gave a green color, so this is a good signal, and this means we will buy here, directly above this candle. And as we can see, the trend went up strongly, because the retracement was at the 200 line. Well, now let's see how to enter short positions. To enter into short positions, the conditions will be inverse, the orange moving average will be under the red, and we will use the red triangles to determine the entry points. As for the filter, it should be red. As it happens here, all the conditions were there, and indeed, it was a successful. But here we see that the filter is in green, so we will not enter. Here we notice that the sell signal is above the moving averages and the buy is below, so it is considered a false signals as well. But here, we find a good entry signal, and the result immediately after that was a noticeable rise, but the next signal, which is this, is false, and indeed, the market went down. Here is also a good sign for entry. But here, although it is successful, it is not necessary to enter, as long as the conditions are not met. But this candle here, it was the fruit of waiting, and the market rally was very excellent. Always avoid entering before the moving averages cross. Well, there are many successful signals that you can rely on, but let me tell you another important thing to improve this strategy. Here we notice a good signal to enter, but always make sure that the target candle has closed above the moving average 200 and not below it. And as we said, you must look at the filter to confirm the signal. As it happened here, all the signs were good, but the filter was the one who discovered this fake. As for here, there is a little problem. Here all the signals were good, and all the conditions are available, and even the filter was green, but with all this, the market has gone down. Even here, the same thing has happened, and this means that we have suffered 2 consecutive losses. To avoid this problem, always remember what Hoffman said, which is to enter above the price of the candle by a center pips. And this means that, if the price in the next 2 candles does not reach the place of the line we drew, we will not enter. Here, the location of the candle just below the moving average 100 may be one of the reasons why the trade was not successful, but if you decide to enter, the line drawing is still important. To make it more clear, let's see this example. Let's say we found all the conditions here, and we decided to enter. In this case, we will enter above the target candle, and the entry will be approximate here, at the middle of this candle. In this way, we will avoid many other false signals, and even if we don't win, we don't lose anything, because the price did not reach the entry area, as we also did not enter. Stop loss will be according to the moving average lines, and the risk to reward ratio will be 1 to 2, and also you can set it as 1 to 1.5. Since the target candle is in the middle of the 100 line, we will use the 200 line to stop the loss, and we will put the profit on the double. But here, we will use the 100 line, because as you can see, the target candle is above it. And in this case, it is recommended to use 1 to 1.5. The last case is a little different, since there is a fake breakout down, we will use candle wicks to determine the low price area, and it will be where to place the stop loss. And the profit will be doubled as well. Finally, don't forget to subscribe. Thanks for watching, and good luck.